All right, this article is coming from the Motley Fool. Why Chewy stock was up this week. This article was written at the end of March. Chewy shares are still underperforming so far in 2023, down slightly even as the S&P has gained nearly 6%. Chewy said last week that sales rose 13% through late January and that profit margins expanded despite soaring costs. While these are positive developments, Wall Street focused instead on the company's shrinking customer base. Chewy remains solidly profitable after all, and it demonstrated its pricing power in 2022, even though the rising prices slowed its customer growth. Chewy is aiming to build on the record sales, cash flow, and profitability metrics that they reached in 2022. At the same time, the company is preparing to go international starting last quarter. Its sales trends should hold up well, even though a slowing economy. Two, as roughly 80% of its business is in the staples niche that includes pet food. The other good point about Chewy is that nearly 75% of the sales occurred through its subscription-based service, which adds to reliable income stream. So let's just go to the stock. If we start from the monthly chart, we can see prices near the lows, all-time lows, versus the all-time highs at 120. What I see right away are these long wicks, so we can say that there is definitely selling pressure at the $50 level, which is only $15 from current price. Let's go to the weekly chart. Now my eyes gravitate to this gap up in price, this basing as well, and this sideways price action. So if I had to give an assessment in this white box, price is at equilibrium. And when it exceeds the box to the upside or to the downside, you have an imbalance between buyers and sellers. So case in point, price closed above the box back in August, but then sold off, right? Sellers are in control. Same thing happened in January. Price didn't close above the box, but pierced it and then sold off. Again, sellers are in control. So what I would anticipate, if price breaks the box to the downside, you would have an imbalance between buyers and sellers in which the buyers would be in control. Now on this gap up, it wasn't done on high volume, so I'm a little leery of the level at 28. But we're going to mark it anyway, as it could be a bear trap. Let's look at this area a bit more on the daily chart. Alright, now I do like the level. Again, wish that there was more volume, but I will explain it. So a gap up in price is seen as an extended range candle. In this case, it would look like this. So if that was the case, you had a rally in price, you had a basing candle, two basing candles, and then another rally rally out. So this will be the level of interest between $29 and $27.50. So if we zoom back out to the weekly chart, if price breaches the white square, like I said, you could have a bear trap in which price reacts to the level that we're calling a weekly's buyer zone. On the top side, if and when we have definitive breakout, price can rise to the resistance support area of $60. Support, resistance, support, resistance. Thanks for watching. Subscribe. Please like the video.